Sure, I get it. But being a bear is easy in this business. If stocks go up, no one will remember your negative prognostication, right? If stocks go down, you'll be a seer. We will sing your praises, worship you. You'll become the big get, paraded out every time the market goes down big because you have street cred and you see that bear go, bleh, you know, bleh. I love that thing. Anyway, you know me. Sure, the day was disappointing, kind of like last week, but I want to tack the other way. I want to tell you what could go right. Give you 10 things that might cut in favor of the bulls. All right, they're not rip snorers. No trampling the bear's hair. Just some things that, well, let's say they make me want to be a little more positive than the others. I need to tell you what can go right because nobody else is. You know what? I like being alone. Some of the best moments of my vacation just ended were being alone. Just kidding about that.
Jim Cramer discusses market negativity despite recent gains, emphasizing the ease of bearish sentiment but focusing on potential positives for stocks. He highlights Nvidia's pivotal role in AI, with its Blackwell chip launch expected to drive significant revenue growth despite delivery concerns. The analyst notes Nvidia's valuation advantage and dominance in AI software, while predicting broader AI trade benefits for smaller cap companies in 2025. Cramer and the analyst explore Nvidia's potential shareholder returns, including buybacks, and its critical role in the early AI build-out phase. While the guest prefers Tesla and Apple for personal investment, Nvidia remains a firm favorite for its growth prospects. Tesla's AI advancements and Apple's strong iPhone outlook are also noted as key long-term drivers.
Gene, I'm just looking through your disclosures. You don't own Nvidia. Why not?
Personally, I don't own Nvidia.
Have you noticed the extreme negativity seeping in already? Even when the stock market was up nicely this morning before the midday swoon to the close, Dow finishing down 152 points, S&P declining 0.22%, NASDAQ losing 0.16%. All I heard was that, well, we've been up big for 2 straight years and we're due for a pullback. Sell. Or these are perilous times like the 1930s, high tariffs, collapse, and world trade coming, the 10-year treasury heading to 5% because of inflation, ineffective Fed, overextended stocks, the bull on its last legs.
It does raise questions about what Nvidia is going to do with all that cash that it's bringing in. What do you think the best answer would be?
I think probably return it to shareholders, share buybacks. I mentioned that valuation at 25x. I think it's quite compelling. And so I think that that's probably the easiest way. They don't need to make any acquisitions at this point. So I think it's probably on the typical well-traveled path of share buybacks, dividends. We probably will see something along those lines we almost have to in calendar 25 for Nvidia specifically.
Gene, I'm just looking through your disclosures. You don't own Nvidia. Why not?
Personally, I don't own Nvidia. Our firm does. Deepwater does own Nvidia. And the reason why we own it is at the end of the day, I think that the obvious trade is still in play here. I think there's a lot of anticipation that this company's growth is going to slow dramatically. But some people even think it may even decline in calendar 26. But as I mentioned, I think that we're still early in the AI build-out phase. So that's why Deepwater owns it.
But you do personally own Apple and Tesla. Why not Nvidia if you are if you have such conviction on it?
I think if I was going to kind of force rank those three, I don't do first from just the highest level. I have very few companies in my personal account, and so I don't think it's necessarily an indictment against Nvidia.
Sure.
It's more just related to my conviction around Apple and Tesla.
So the Apple and Tesla are still your highest conviction stocks because those are the ones you own too.
Yeah, for the long term, and I have the benefit to own things for 5+ years. I think it's worth mentioning. We'll get the Tesla numbers here momentarily. I do think Tesla is due for a pullback here. I mean, we've had some incredible, of course, $700 billion in gain over the last 3 months in the market cap. That's just not sustainable. But I think that what they're doing around AI is going to ultimately drive the market cap higher. And when it comes to Apple, I think the iPhone is going to grow closer to 8% for this coming cycle, and the expectations are for 3%. So that's where my conviction comes from.
Talk to me about Nvidia. This is the key question. Is Nvidia still going to be a winner in 2025? What's your bull case?
Well, Madison, thanks for having me. Basically, what we saw towards the end of last year is Nvidia stock stalled as we were approaching the launch of their Blackwell chip. So the key for the stock from here will be how well they execute on this launch. We see significant upside once the delivery numbers ramp. We think they're going to be able to exceed $200 billion in revenue just from this product launch for this year. So we see a lot of upside. It's just going to be key to get this product rolling in the initial quarters.
What do you think was the kind of downward pressure over the past month or so? Is that something you see correcting?
Well, that is exactly it, Madison. I think it's these delivery numbers. People are still concerned whether Blackwell is showing the improvement that we are expecting to see, and whether they're able to deliver it on time, where doesn't have overheating issues. So those were really the challenges that the company never really said that they were facing, but we were hearing from customers. So there is a lot here in how you integrate the product. So it's not the product may be working fine, but once customers deploy it, that's the question, whether it's working good for them.
Where do valuations fall on your list of concerns and your kind of rubric for looking at a stock like Nvidia?
So valuation is very important for us. And when you look at Nvidia, because of the way earnings have grown, the stock actually looks very attractive on a multiple basis. So if you look at EBITDA, which is what we focus on 1 year forward, you're going to see that it's trading right in the middle or on the lower end of the historic range. And now it's cheaper than stocks like Broadcom and Marvell that we also like. So it actually screens very attractive on valuation basis.
Yeah, talk to me about your bull case for some of those other AI plays.
So basically, as we get further into the cycle, Nvidia will remain the dominant player just because of their CUDA advantage. However, we're going to see a lot of the hyperscalers, like you mentioned, Amazon, build their own chips and bring those to market. So Marvell is partnered with Amazon, Google is partnered with Broadcom, so they're going to be helping these companies bring their own chips to market, which will take pretty significant market share over the next several years. We still, though, compared to where the market stands or what the market is assuming, we think the growth for Nvidia will remain much stronger just because of their advantage on the software side.
And obviously Nvidia, the second biggest gainer year to date in 2024, but the first was Vistra, a nuclear energy play, and I know Vistra and Constellation are among your picks. Talk to me about your case for those names.
So as we saw the AI trade broaden, now we are getting into a phase where we need physical build-out of data centers and power associated with them. And the US has gone through a period of time where the power infrastructure has not really been upgraded, both on the grid and the generation side. So as we've brought more renewables to market, the reliability is much lower of the grid. So what we're going to see is power prices spike up in order to incentivize new supply coming to market. So that's where companies like Vistra benefits. We also like Constellation. They operate one of the largest nuclear fleets, or the largest nuclear fleet in the US. We think nuclear is very well positioned for the hyperscalers just because of the reliability. So we see a lot of opportunity on the energy side.
How much are you thinking about the incoming administration and any regulatory looseness that we could expect for those nuclear energy names as a potential tailwind for them in 2025?
So the regulatory environment is always tricky because it does depend on states as well as the federal government. So I think less regulation would be a pretty significant positive for them. Incrementally, though, I think gas is also benefiting here from looser regulatory environment. So I think both nuclear and gas are well positioned with the new administration. I would say new administration is incrementally more positive for gas than for nuclear, which is why you've seen Vistra perform better than Constellation.
I guess taking a bit of a step back here, there's been this big question about the AI story and whether or not it is overblown, whether this is going to be the year that the investment really proves itself and we see those applications. What do you make of those questions? Do you think that those questions themselves are overblown?
I do think the questions are overblown because if you look down under the hood, we are seeing a lot of applications that we're using already today. Right. So on the search side, the new AI, the transformer model has been really transformational in terms of how we do search today. So even though those are really replacing prior search, so you're not really seeing incremental revenue from them, they're pretty big applications. Now, as we look forward, we think there is going to be a lot more innovation on the physical side of things. So the autonomy, robotics, even in quantum computing. So you're using the AI models today in order to build some of these applications for later down the road. So I think that's really like this may be even year one, maybe year one will be next year. So it's kind of like we're really in early innings of the applications being built out.
Do you see the AI trade broadening to some of those smaller cap companies in 2025? Because that's also been another question, is when we'll see not just the hyperscalers benefiting from AI, but also some of those smaller names.
Absolutely. So we think this is going to be the year where we see like the effect trickle down from, like 2 years ago was just Nvidia, last year was Nvidia, some hyperscalers, some of the custom chip providers, and I think as we get further into the cycle, you'll see some of the software names on the cybersecurity side, the data infrastructure side, and then applications lastly, that would be like autonomy and robotics.
Jim Cramer and his guest discussed the pessimistic outlook on the market despite recent gains, focusing on Nvidia's strong position in AI and its upcoming Blackwell chip launch. While Nvidia faces short-term delivery concerns, its growth potential remains strong, especially in AI software and hardware. They also explored the energy sector, noting opportunities in nuclear energy with companies like Vistra and Constellation due to the growing demand for reliable power infrastructure to support AI growth. The conversation highlighted Nvidia's role in AI's future, and while Cramer personally favors Apple and Tesla, Nvidia remains a key player in the space. The discussion also touched on potential growth for smaller companies as AI expands. Will Nvidia continue to lead the AI market through 2025, or could new competitors emerge? Which industries or smaller companies do you think will benefit most from the AI boom in the next few years?